Hi everybody, Alex Deploy here from Expert Forex, and in this video we're going to be looking at grid trading based on a zero drawdown. Now I'll explain all this later in the video. A short while ago we offered a free simple grid trading robot for download, and we've had a great response to this offer. Over 3,000 traders are actively trading this robot because we can tell that from our licensing system. I followed that video up with a print money video where I showed how profitable the grid trader is and how you can literally experience a situation where you are printing money. But during this video, I also alluded to a safety mechanism which will reduce drawdowns. And that is what we're going to be looking at in this video. So we have created another version of the EA. And this is not an upgrade, it's another version. So the free version is still fully available. What happens with the free version? There's no optimization allowed, and there is no trading on live accounts. But it is highly profitable as shown in that second video of mine. So we've created the second version, version 2.0, where optimization is allowed, live trading is allowed, and most importantly, a zero drawdown facility has been created. The release of all those functionality will cost $49.95. We are trying to keep the price as low as possible, but you will see that this version is highly enhanced in terms of risk control. So how does the zero drawdown facility work? Basically, it says when the equity improves by X amount, it could be $100, it could be $150, it could be $200, and that's a trader input, then close all the deals and start all over again. Now, what is the purpose of that? Firstly, it's banking the gains. That's a very important aspect of trading. You need to bank your gains. The second one, it closes all the deals, so there is no drawdown. There is zero drawdown at that particular point. And that's why we call it the zero drawdown facility. You reduce everything to a zero drawdown. Let's have a look at this. So here are the results of the zero drawdown facility, where we've used the euro pound and back tested it for 1 month using a $300 zero drawdown amount. So what happened here is, so we've created a net profit of just under $600. The absolute drawdown was $112. Remember, we are trading with a $10,000 account, so it's highly safe numbers we're talking about here. Maximum drawdown $318 compared to the $592 income. And profitability is just under $80. So now, if we didn't use this zero drawdown facility, what would the results look like? And here they are. And they, in fact, are a lot better. They're almost $100 better, $694. You must say, you're crazy. Why are you using the zero drawdown facility if this is giving you better results? But let's look at this a little bit closer. Firstly, look at the absolute drawdown. Here you have almost $250 absolute drawdown. There only $112. Then here we have a drawdown of $632. There we have $318. Almost half the drawdown. So that is the point. So if you're an aggressive trader, you would trade without the drawdown facility and you'll make a little bit more, but your risk will be double. If you're a more conservative trader, you would use the zero drawdown facility with reduced drawdowns. And in fact, what that means that if you are cheeky, you can in fact double your lot sizing and experience the same drawdown as you would without the drawdown facility, but double that income. That's just a cheeky approach. Not suggesting you do it, but if you're really cheeky, that's what you do. Ha! How does version 2.0 look like? So it's a very simple one. Here is the gap in pips. You have to enter the gap in pips. We give suggestions on what kind of gaps you should be using. There's the lot sizing. Again, so we give you suggestions on the lot sizing you should be using. And there is the closure amount in dollars. So at the moment, the example we've used is $300. You can play around with $200, $100, $150. You can play around with those kind of numbers. But that is the number that the EA will close all the deals and go to a zero drawdown. And that's what we want. And then it says, do you want to re-enter when you it's done that, or do you want to stop completely? That's also an option. So those are the changes to the EA. And here you can see it on a chart. And there's the trading happening. Trading is going on. Lots of open trades, lots of closed trades, boom, boom, boom. And then eventually it reaches a point where equity has gone up $300. Okay, and then it says, okay, now I am closing everything. I'm banking my $300 and we're starting again. Zero drawdown. So it goes again, off it goes. Oh, it goes into a trend. Look at this trend, terrible trend. Goes down, big problems here, and it goes up again, and so on and so on. And eventually it reaches a point again where it has a $300 profit. So that is now $300 on top of the previous $300 that was made. So it banks again a $300 profit. So that is the big point here. It reduces the risk tremendously because it's constantly closing open deals. That is something that really worries traders. They say, what if we got hundreds of open deals for the next 6 months? Well, if you use this, that won't happen. Here you can see in 1 month it actually went to zero drawdown twice. And then it started trading again and cashed in a whole lot of trades and had an open balance. So there is a representation of what you're looking at. It doesn't increase your profitability, but it decreases the drawdowns tremendously. So if you're interested in purchasing the zero drawdown version 2.0, then use the link that is provided in the description of the video as well as in the commentary of the video. As I say, it's not an upgrade from the free one. It is a version all on its own. Now, I really hope you enjoy this change that we've made to the Grid Trader. So from me, Alex Deploy, cheerio.